All right, everyone, welcome back. We're going to be going over order blocks. So order blocks are simply a price level, and it's the last sell candle, in this case, a red candle, before the up movement. And then we have the last up candle before the down movement. All right. All right, these are order blocks. All right, order blocks are pretty much full body candle. All right, that's how they look. Now they're not gonna be perfectly full body, but they're mostly at least 80% full body. Okay. And then that open of the candle is known as a price level. Price level. Some people call it key level. Same thing. Price level, key level, right? It's simply a price level. So that means that price can come back to that level multiple times and still be a valid level. Because it's simply a price level, right? That also means that it's not going to respect it perfectly. There may be some slippage. And what that means is price can go to 50% of the order block, 50% right here. All right, and still be a valid order block as price goes to the upside, right? And the same thing, vice versa. So let me delete this. All right, same thing, vice versa. All right, so we have price coming down, and then it makes a retracement. And it taps into the price level, pushes away, right? And then it comes back up again. And it comes into, let's say, the 50% of the block. It has all right to do that. That doesn't mean that the block is not valid anymore. The block is still valid. So it'll continue from there and then it'll fall, right? Because it's a price level, price can tap it multiple times and it's still valid. Okay. I feel like we have the misunderstanding or the misconception that the order block is formed and price has to just come, tap it, and never come back. Now it does happen. It does. It does happen a lot, right? But if price does come back, it does not mean that it's invalid. It's still valid. Price can tap the open of the block, then come down lower to the 50% of the block, and then continue from there, continue going, right? So let's go over some more examples. If we have a order block, all right, and then we have liquidity being built just above the open of the OP. All right. Then price is going to take out the liquidity, tap no open, make a move. Now, let's say that this point here fails to take out this high. If price fails to take out that high, then this becomes weak. That will be a failure swing point. Okay, because it failed to take out the high. So that now becomes liquidity. So not the open anymore. Now we're looking at the 50%. The 50%. And then price goes back down, taps into it, and it goes. Remember, the market needs liquidity. It needs a reason to go to a certain price level or to a certain POI. It needs a reason. It can't just go there because it needs a reason. And this gave it a reason. All right. And the same thing, vice versa. So a order block is a full, almost full body candle, at least 80 to 90%, right? Now, a rejection block, a breaker block, they're also a order block. A rejection block is only a sub name, okay? And a breaker block is also a sub name. But at the end of the day, all two of those, or all three of them, let's say, are order blocks. All right, those two are order blocks. Rejection blocks and breaker blocks are just simply order blocks. But these names that they have are just sub names, okay? So all three of these are order blocks. Order blocks, breaker blocks, rejection blocks. They're just order blocks, okay? But these are the sub name, rejection block, breaker block, just to help you identify it on the charts, all right? But that's what an order block is, okay? So now let's get into the rule of a order block. That is applies to all the order blocks that I just mentioned. All right. In order to make a order block valid, we need liquidity above or below. So we have our block here and our block here. We need liquidity above or below to make it a valid order block. Okay, we must have liquidity. So we need liquidity above or below, okay, depending on where the block is at, to be a valid OP. All right, simple as that. Now, when we have our order block, in other words, our point of interest, all right, you have to watch how price is being delivered. All right. So let's say that you have a limit, for example, here. All right. But there's no liquidity resting above the OB. So you shouldn't have that buy limit. Okay. So you remove it. And then this happens. Price never taps it, builds liquidity, then taps, then it goes. So you remove your limit, and after you removed it, price tapped and went. Because at this point, it met your rules. So what I'm trying to say is you have to see how price being delivered or how price is approaching your POI. Okay. You're not gonna always get that perfect structure point just sitting above that order block. It's gonna be times where there's nothing. There's nothing, so you have to wait for it to form above the OB. Then you take the trade. Okay. Well, that's it, order block. That's it for now. On to the next one.